Prestige Estates is the company we're speaking with. It's been one of the big winners of 2023. Stock has seen a stellar move. It's up 150% nearly this year. Mr. Irfan Razack is with us, Chairman and Managing Director at Prestige Group. Mr. Razack, great to have you with us here, sir. Thank you very much for your time. It's been amazing, and if one has been a Prestige shareholder, one is feeling prestigious, one is feeling happy. So you heard Saurabh is here, and he's listening in as well. Just comment on that a little bit. The accepted wisdom in a way is that we're in perhaps year 2 or year 3 or what will be a 7-8 year kind of upcycle for real estate, for the real estate market per se. Just comment on that first, and then some of the points that Saurabh made, if you were listening in, sir. Go on.
Yeah, good morning, Prashant. Actually, it's quite an interesting conversation you had with Saurabh. Yes, the real estate investments, home buying is here to stay. I would always say it's the tip of the iceberg. And like he said, it fires up the entire ancillary industry, the support industry that is there supporting real estate. And that is, if you look at it, it is every material conceivable for, I think we support almost 230 odd of these industries. And that's where the good news is. And it's just the beginning. I mean, this housing, urbanization is happening very rapidly. People need homes. We need to build more and more homes. Yes, in which category is the question? And I mean, the obvious answer is we need to cater to the bottom of the pyramid, while we also are doing luxury and premium homes. So it's a mixed bag that we have to be on, and that will be the winner. And the volumes will come from the mid-income housing.
Mr. Razack, good morning, and Happy New Year in advance to you and your team at Prestige. Now that we're entering into perhaps what could be a long rate cutting cycle, it could begin with the Fed, the RBI could take it forward as well. Do you think that the demand will go up for real estate inventory and for houses compared to what we saw in the rate hiking cycle, or is that just on paper? I mean, does it really happen? Does it really play out like that? And what is your expectation for the full year?
No, I see it's a feel-good factor. See, when the rates did go up, everybody was having that fear that people will stop buying, but that didn't happen. But the thing is, if the rates don't go up either too much or go down too much, I mean, there is a feel-good factor. Obviously, if there's a rate cut, there is that cheer, and there'll be that many more commitments that will happen. And what it does really is, if there's a rate cut, it gives that much more money in the pocket for the home loan for the home buyer, so they really can buy a slightly more expensive house. Because today everyone is looking for that one extra room in their apartment, and that is what is also helping us in the sense this work from home culture, some space for themselves. So that realization has come. And I think a rate cut will definitely help in us selling a slightly more larger or bigger product.
All right. Hi, Mr. Razack. Good morning. Thanks so much for joining in. Nigel on this side. Well, tell us what percentage of your sales come in from new sales and how much of it is coming in from the old inventory?
No, that's an amazing question, because today all our old inventory is almost sold out. So we hardly have any old inventory, and whatever is coming only from new launches. That is why there's a huge dependency on keeping on launching new product. And the quarter that we don't have a big launch, that quarter we have a little bit of a slowdown in the overall top line revenue. Having said that, now we've been launching quarter on quarter a lot of products, different cities. And that's helped us to sort of pump up our top line. Like now in Mumbai, I'm waiting for my Ocean Towers, the RERA number, which is likely to come today. Once it comes in hand today, we were hoping to get it much earlier. But then, okay, if it comes today, hopefully in the next 15 days, we'll notch up a lot of top line revenue. Similarly, we did a big launch in Hyderabad in the beginning of November, and that also helped us get a huge revenue. So this quarter was dependent on Hyderabad, Mumbai, Bangalore. We did a small launch, and then see now we hardly have inventory in Bangalore. And whatever the good news is, whatever we are launching, it's getting completed. It's just there's nothing left over. So then there's that much more pressure for us to see that the new inventory comes in and we get the revenue.
So you're targeting 20,000 crores of sales in FY24. What would it be like in FY25? What could the reasonable growth be?
I see when we did that 13,000 in FY22, I gave a target of about a growth between 20-25% on that. And now the good news is we inshallah we should reach and we will reach that 20K mark for this financial year, that is FY24. Going forward, yes, the teams are working hard in different geographies, seeing that, you see, it's all production. Basically, it's planning, approval, all of it, and there's a phasing out coming, bringing in the product into the market at the right time. So with this sort of push, and if everything goes well in terms of getting the RERA, getting the approvals in time, I'm sure FY25 will also have a growth of about 25% on the existing base, because the base is getting larger. I don't think we'll slip behind, but I'm very confident. I'm very, very positive that there will be growth on that large base.
So, Razack, what you seem to be telling us is that the only constraint is, approvals. Not a constraint, but how fast you can get approvals. That's about it, right? Because that's how fast you're able to sell these projects as you launch them. Sorry, you want to come in, sir?
Material, it's the raw material. See, for me, raw material is land. And I need to see that I have the right type of location, the right type of land. The teams have to work, conceive the drawings, conceive the plans, and then get all the approvals. There are lots of approvals that you need to get to the final approval. So, right from your fire and environment and everything else. So it's a big work, a big job that we have to do. And it takes about at least a minimum of a year from the time we start conceiving a project to bring it to the market. So that's the type of level of work. And that 1 year I'm saying is the minimum time, not the maximum time. So that's how it is. But I think our team has really, really got the art of doing it well. And we seem to have sort of mastered that. And that's how we are able to bring in more and more product into the market. So once it comes in, we are very confident there is a demand and people are buying.
Mr. Razack, I just wanted your thoughts on it. I mean, I don't think there's a definitive answer with anyone. But how much is the real estate cycle dependent on the stock market cycle, in your opinion? Because, I mean, the one thing which is is just a big boom going on, right, in stocks and equities. There's the wealth effect impact as well, which is well understood the world over, not just here. So, is it kind of sort of one feeding into the other? Your thoughts on it?
It's just not the stock market. One thing is they're not related to each other, but like you really said, is the wealth effect. It's just not the stock market. It's the general share. It's the economy itself. It's the business itself, and people are into money if there's got spare cash and they would like to invest. And the investment is either in the stock market or real estate. And now real estate has found flavor. People have seen growth. And of course, they've seen huge growth even in the stock market. So it's a trade-off, and where the money goes is another thing. But ultimately, everybody would like to have a home. And everybody would definitely like to, sort of, if they've got the first home, maybe upgrade to the second home. And of course, we used to do strata sales of office. Now that's sort of tapered off. We're not doing it anymore because it's a lot of management that goes into it, a lot of executive time that we have to spend when we do strata sales. So rather complete
Mr. Razack?
Yes.
Sorry, I don't mean to interrupt you, but since you were talking a little bit about the office space, commercial space, etc., what have you made of the new SEZ rule that has been put in place? And I want to understand what is the percentage of commercial real estate assets that you have in this SEZ space, and what would the impact be?
Now, the impact will be very positive because SEZ had sort of tapered off, and many companies wanted to operate out of the SEZ spaces. There were many buildings that were ready and they couldn't be occupied only because they were SEZ, and there were many users who were non-SEZ. So by this rule change, you just pay back the duty, And this rule change will bring in a positive effect for commercial real estate. A lot more space will get unlocked, and people will be able to occupy these spaces, and then the vacancy levels will drop. So that's a very, very positive move. I think government also understood that and realized it. And there's no loss to the government. Basically, all the taxes duty, the benefit that the developer had taken has to be paid back. So it's a win-win for all. It's a win-win to the developer, win to the government, and I think positively, the thing is that the spaces will be used unnecessarily instead of lying vacant.
Okay. All right, Mr. Razack, we'll let you go on that note. Thank you so much for joining us. And, speaking to CNBC TV18, you've been a star performer this year, both in the stock market and outside. So hope you continue to create wealth for your shareholders and provide, great homes for all your consumers as well. Thank you so much for joining us, and Happy New Year to you once again.
Happy New Year to all the viewers, and we hope that 25 brings in more cheer.
Okay. All right, sir. Thanks a lot for that.